U.S. citizens living abroad, such as in the UK, can use the Foreign Tax Credit (FTC) to offset U.S. taxes owed by the amount of foreign taxes paid, significantly reducing their U.S. tax bill, potentially to zero if UK taxes exceed U.S. rates. The U.S. has tax treaties with around 70 countries, including the UK, to prevent double taxation. These treaties often allow dual residents to pay the higher tax rate between the two countries, benefiting from lower U.S. tax liabilities. In 2023, the Foreign Earned Income Exclusion (FEE) allows for the exclusion of up to $120,000 and $126,500 in 2024 of earned income. However, this applies only to income below the exclusion limit. Income above this threshold is subject to U.S. taxes. You cannot use the FTC on income excluded under the FIE, but if you earn above the FIE limit, you can apply the FTC to that excess. The credit applies to various foreign income taxes, on wages and dividends, but not to property taxes. To claim the FTC or benefit from tax treaties, a U.S. tax return must be filed, even if no U.S. tax is owed. This information is crucial for U.S. expats to effectively navigate their tax obligations while living in higher tax countries. How to claim the Foreign Tax Credit (FTC). To claim the Foreign Tax Credit (FTC), you need to complete Form 1116, which is used to report foreign earned income and calculate the credit for taxes paid to foreign governments. This form helps determine the credit allowed against your U.S. federal income tax liability, especially if you've paid taxes to multiple countries. It's important to carefully follow IRS instructions when filling out Form 1116, as it can be complex and errors may lead to costly mistakes or even audits. The process begins by identifying the foreign country or U.S. possession where you reside, followed by reporting your gross income. The next steps involve defining income categories such as general and passive, calculating FTC for each income category separately by determining the tax paid or accrued. Calculate the foreign tax credit carryover, combining FTC amounts to arrive at the total credit for the tax year. The foreign tax credit for companies. The foreign tax credit (FTC) also applies to taxes on controlled foreign corporations, CFCs, which are foreign entities controlled by U.S. persons or corporations. A U.S. company controls a CFC if it directly or indirectly holds more than 50% of its share capital, voting rights, or dividends. U.S. corporations meeting these control and ownership criteria can claim an indirect FTC for taxes paid on profits distributed as dividends. U.S. expats with foreign business holdings must file information returns with the IRS. Failure to do so disqualifies them from the tax credit. To claim the FTC, corporations must file Form 1118. However, the landscape has become more complicated due to the introduction of Global Intangible Low-Taxed Income (GILTI), and Foreign Tax Credit. The GILTI, Global Intangible Low-Taxed Income, imposes a minimum tax on the worldwide earnings of controlled foreign corporations, CFCs, held by U.S. persons, and it expanded U.S. income tax liability on these foreign entities, allowing for taxation even if active business earnings are not repatriated to the U.S. Before GILTI, U.S. companies could defer taxes on active earnings from foreign operations. Now, GILTI introduces a 10.5% minimum tax on global income from intangible assets not already taxed in the source country, requiring annual taxes on income from patents, trademarks, and copyrights held by U.S. persons. The GILTI tax rate currently ranges from 10.5% to 13.125%, with an increase to around 16.5% scheduled for 2026. Individuals owning at least 10% of a foreign corporation's voting or value shares, or those with a CFC more than 50% owned by U.S. shareholders, are subject to this tax. If the above is beginning to tax your ability to focus on and retain crucial information, you're not alone. This is complicated, difficult to negotiate tax law territory, even for the most nimble of financial minds. Whether it's renouncing your U.S. citizenship or developing a bespoke tax-efficient overseas plan, Crimerman is here to help you. If you want to know more about this measure, do not hesitate to schedule a consultation with our CEO. He will be able to advise you in the best way. Don't forget to subscribe to our channel. See you next time.